The obvious observation of a large downtrend will naturally focus attention towards the formation of bullish reversal patterns and bearish continuations. Here is an instance where there was a strict double bottom with delayed completion due to low volume and persisting selling pressure at the upper boundary, near the site of the early February gravestone doji. That was part of an evening star. The ideal scenario did take place as price kept contact with the 32 level, prior to the sufficient influx of bullish volume and steady closes higher in March. Another reminder to be patient and wait for the conclusive completion of a pattern, since delayed completion isn't out of the ordinary. The overall bullish reversal range could be considered a double bottom or a less strict triple bottom, since there were technically two upswings in January to form a small double bottom in line with the approximate range of the February upswing. However, these are less important details, similar to the previous cases of formations straddling the border between triple tops and head and shoulders patterns. The main area of interest is around 3330 and the progression of this developing uptrend. Even if the double bottom wasn't properly identified during its formation, or shortly after its completion in the 2 weeks after the break over 3330, it was distinctly recognizable later on, as a clear uptrend line originates from it. As usual, once the uptrend line is breached, it begins to have less influence, and led to a period of neutral to bearish price action. That became the resting phase in a bullish continuation ending 2016. This demonstrates the breaking of a trend line originating from a pattern will almost always slow down the pattern's reversal with a relatively flat phase, but won't always lead to a complete reversal of the trend. When another large downtrend emerges, the double bottom range does support falling price, but it is only temporary. The chart demonstrates another case where even though a support range is clear and provides firm opposition to a downtrend, there is no 100% guarantee a major bullish reversal will emerge to stop falling price. This is especially true when highly bearish price action returns, with near vertical drops. Similar to what was seen at the start of the example, the price action of near vertical drops are more than adequate to highlight the strength of bearish sentiment without necessarily having volume, similar to what would be found with a strong downtrend on a forex chart.